All right, ladies and gentlemen, I hope you had a wonderful day. It was a red one for the markets, but it didn't feel like it because the stock market is broadening out. We had another one of those weird days where, yes, we sold off, but we are still near new all-time highs. So even though we did sell off, it's like, well, are you really going down? Not really, even though we have 2 down days in a row. You haven't seen this on the whole year of the market. You haven't seen 2 down days. That's kind of rare. But all in all, we had a little bit of action. There was a lot of activity all across the board. And like I'm saying here, even though you saw some red in some of the bigger names, the chip makers did whatever they wanted to. Small caps, earnings, they all had their own individual effect. And then Bitcoin came back up, hit another high, and that got a lot of people excited and also set off a different wave of risk sentiment, which we're going to talk about. But all in all, we have a huge data week. We got a little bit of that today. The markets are digesting everything for the end of the month and last week. And now we got a pretty exciting week ahead of us. So, Chad, I got the plays for you. I got the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 last. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, starting with the first key, today was wider than it was bad. And this is what we mean by broadening out. If you take a look at how the index is closed, the Russell was actually green today. The Dow not down as much, and then the S&P, that was the worst on the day, with the NASDAQ right there barely down. Even though things were red, what you want to see is what actually went up. There was things going up, and today showed us what the market kind of felt like when it's not being led by Apple, Amazon, Meta, and all that. Even though Nvidia did find a way to go, I guess it closed barely red, but it was green most of the day. But this is what I'm talking about by broadening out. A lot of people brought this up. People were saying, is this rotation? Maybe it might be. We are wrapping up earnings and going through all of this and getting ready for a new month in the end of the quarter. But this is just the first day so far after a really big peak and a lot of exuberance. So you just got to see what the market felt like with other names going up rather than these just main 7. And then in the background, what was going on with crypto, that was a very big deal. So all in all, the optimism still remains in the market. And if you see these last 2 days, like I'm saying, even though you're getting these 2 baby red candles, why there is still optimism? Because we are still extremely elevated. If anything, the way we're kind of slowing down and just maintaining this recent high, I think it's pointing towards this hesitation towards the data. There is data every single day. You're going to get Fed speakers, still even more earnings. This is what is driving us here, and I think the markets are kind of waiting to make those moves, as there is still a very big divergence now between bonds and the markets, especially if the markets are going to hit a new high every single week. So this is what we're coming into with all of it, but all in all, I think we're kind of just slowly crawling at the highs as we get the data and wrap up the month. We have the durable goods tomorrow in the Conference Board of Consumer Confidence. There's also going to be the Richmond Fed manufacturing and services, as well as home prices. Today, we did get to hear from real estate data was the new home sales, and then there was another set of data in the morning. It did have an effect on bonds, but not in the way you would think, because the data was a little bit weaker, but you saw the bond yields also start to climb. You would think that the markets would have liked it a little bit, considering we have been worried about hot data. So we'll see how things play out, but another part of how the markets are moving in this mode, earnings may still be responsible for a lot of moves, and I think we saw that today. There was a ton of different names. If you even go look at the earnings premiums, when we were doing all of the previews, some names, their premiums were up 50, 60% on the day, even if the stock did nothing, or there was some names that just hopped up 6, 7% getting ahead of their earnings, or the sympathy to another company in that space. So there's a lot of those effects, and like I'm saying, we got to wrap up all of that here with the end of the month, and I think that's kind of weighing on it, and then we're just going to inch into the data. But all in all, it doesn't look like February is ending on a negative note. That's what we've been talking about. I thought it was going to end negative, and now it's not looking like it is, but we just got to get through these next couple of days unless the data has anything to say about it. But now the final point, because like I'm saying, there was a lot of good and bad today depending on where you wanted to look. I'm ending it with Bitcoin. And now you have to ask yourself, does Bitcoin going crazy on these days where the NASDAQ's red, SPY's red, and we're not really getting much even though the Russell's up? You have to ask yourself, where is this risk on coming from? Is it because of Bitcoin? Does Bitcoin show us that people are feeling more risky coming into this new month? Or is it just that Bitcoin is catching up to the NASDAQ now because NASDAQ's been at all-time highs? Bitcoin still has a long way to go to all-time highs, or I guess 20%, not too bad. The general idea is, are we getting risk on and people are feeling optimistic? Is that why the dollar and bonds and everything, it's just more so all of the inflows and how people are feeling in relations to positioning? I think that's going to be important for the end of the month and then coming into the next one. But like we saw today, Bitcoin, a lot of individual assets had some of their best days, hit 52-week highs. Meanwhile, you have this stock market holding a very high level, but it was going down intraday, or at least from the day prior. So all in all, it was a very interesting day. I think it's highlighting what we're going to deal with this week. Get ready for all of it. But now, let us get into the plays. So, right off the bat, we have a couple of earnings plays. We made those yesterday. I think I actually have 4 plays. So, before I get in any of them, I'm going to go straight to the bottom. Let me get straight to the bottom because I had this one up. I don't know if you noticed while I was going through the charts, but PTN. So even though there's earnings season, I'll tell you this now. Yes, we are getting ready for the end of earnings season. There is still a lot of companies. We spent an hour going over previews today on stream, so make sure you are there. But we have been talking about biotechs. I made a biotech play today. They had data. It was up 15%, then sold off. I lost 15%, still holding it. But I said I'm looking at a lot of these, and thankfully, non-thankfully, we don't get all of the action until March, but now coming into the end of February, there's a couple of names that are cornered. I think mine or Minerva, even though I thought that was a weed penny stock. There's a biotech, their post due on a date, but PTN, they were supposed to have data that comes out at the end of February. You only got 4 days left. You may see something come out with this stock. It's already up 15%, so keep your eyes out for that. That is play number 1. I actually have 4 plays instead of 2 today, so watch out for that. But then getting into play number 2 now, Netflix. This was the other one that I wrote down here and why I'm looking at it. I made a play this morning. We've talked about Netflix hitting 600, and I decided to go with the small option play, and I am willing to throw a small amount of money on it this week. Why? Even for the next week, because I like how it held up today. If we're finally getting a day of rotation and not everything melting up and things working out their own paths after earnings, I like that the big 7 goes down. Netflix found a way to hold up here. It gave me a good sign. We've still been waiting on the 600. You even saw Meta creeping behind on that 500. So I said, hey, let me find a small, cheap option play on Netflix. And this was one of the plays that I went with in the morning. It wasn't too crazy, like I'm saying, to see. This is a general idea I like, but it's not something I want to put a lot of money on. And that's why I went with a March 15th, 685 call on Netflix for 35 cents. So 600 is the real breaking point. I got a 685. That is nowhere near 600, but the general idea is if it does start to get that momentum this week, we do see Netflix outperform. I'm thinking I could get a couple of 100% on this. We ghetto spread it, make it free, and then that's it. Otherwise, $35 loss, keeping the exposure minimal. But that is play number 2. Watch out for that. Then play number 3. This one is one I made after hours, and I sold out of her early. And I'm kind of disappointed because it kept going higher. But HIMS, they had great earnings and great guidance. I think this time around, they may actually benefit off of it. I think the last time HIMS had good guidance, the stock sold off, and then it found a way to edge up throughout the next earnings period to go up like 20 or 30%. But they did struggle a little after their last earnings. This time around, they are holding up like 20 or 30%. Their earnings and guidance killed it. And a lot of small companies lately, like Root, if you saw them, their earnings were good. Kind of a similar similar company and a similar vibe. They did good, and now they're breaking out, going crazy. This is why I like HIMS. I sold out today. I only made like $150 or so, so I will be looking for a double dip tomorrow, but I want it to actually go down. Unfortunately, I sold out a little higher. Now it's higher, so maybe that's what keeps me out of it, but I am definitely going to be watching this one tomorrow. That is play number 3. And then finally, since I started off with the Biotech, I got play number 4, AAP, Advanced Auto Parts. So they're going to be a sympathy to AutoZone. AutoZone reports tomorrow morning, but then the next morning, Wednesday morning, we get Advanced Auto Parts. So the thing is, I think they're a sympathy to AutoZone, get in the zone, but they're also going through their own little recovery story. This one could have a good run up tomorrow morning, so I really think either there's going to be no play at all on this and all of the options are going to die all day tomorrow, or that first hour or so, I would keep a look on Advanced Auto Parts, and then we'll see where it takes us if it is really going to react depending on what AutoZone does. So watch out for that. That is play number 4. As far as everything else, I made a couple of moves. I sold out of Cody shares for a 16% gain, and then same thing with Soundhound. I was up 16%. I sold out at $4.30, and then it went up another $1. Yeah, I held these shares from end of last year. If you guys remember, we were in at $4. Finally went up. I said, let me get out of this, call it a day, and then they finally ran up. They have earnings on Thursday, and they have been going with all of the AI and NVIDIA investment sympathy. So we'll see how that plays out. But got out of those plays, got out of oil for a $70 gain, and then I think that's all I did. Other than that, I did add a TJX in the morning. I grabbed a 110 call for 15 cents, 2 of them, $30 total. The idea is sell those for a pre-earnings run-up because they report in the next couple of days. And then I did buy a Square. This was one I actually really like, the March 87.5 call. Why? Because I wanted those squares for 2 standard deviations, and well, they hit, and then they came right back down. So either Square is going to plummet a little bit more, kind of how it did on that last earnings, or we might be able to get a sick double dip on that. So I like it. $35, again, keeping the exposure small. And then for earnings, played NCLH both ways for about $28. Cracker Barrel for $25 both ways. And then AMAT, I keep calling AMAT, AMT, American Towers, $15 for one direction, and then Macy's for one direction as well. So we'll see how those play out in the morning. Otherwise, keeping it small. Like I said, we're wrapping it up. And honestly, like I told you on the first play there, some of the earnings, man, what I've been seeing with where these premiums have been opening up, they're kind of jacked up so far later into the cycle. So I think we might need to let things work themselves out. Otherwise, just get ready to work your way into the next set of things, the end of the month and the end of the quarter. But now, that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, the House of Wisdom, it has a foundation. It has a lobby. It has rooms. It has levels to it, baby. So build it up and focus. Make sure it's not superficial. Stay in the game and chat. I love you all. Drink that water. Stay hydrated, healthy, all that good stuff. See you in the AM and horn.